This is an interesting stock. This is one that's really kind of shifted the dollar store space, as it's kind of the $5 store.
Hi, guys. Right, exactly. So Five Below is one of those discount retailers that carries discount items from between $1 and $5, but they also carry items beyond that $5 mark, including even video games, which I was surprised to see. But Five Below actually receives a lot of love on social media. When I was combing through tweets earlier today, I saw a lot about wanting to, or about specific items that people were surprised to find at Five Below, as well as people looking there to for their back to school shopping and for even buying online. But I want to go ahead and dive into the first tweet that I found for you guys today. And this one is short and sweet, but this Twitter user says that they really need a shopping spree in Five Below. And, I would say that Five Below probably really needs that from them as well. Five Below, like a lot of other retailers that we've talked about recently, was not immune to the pandemic. In fact, it temporarily closed all of its stores, but as of its latest earnings report back in June, almost 90% of those stores have reopened. But they did see a drop in revenue in last quarter's report of 45% year over year, as those closures wore on their earnings and wore on that foot traffic. But looking forward, I mean, Five Below is in the same space as Dollar Tree and Dollar General. However, they do differentiate themselves a little bit. And that's where I want to introduce this next tweet as well that I have for you guys. This Twitter user said that their concern would be that Five Below customers are less loyal as they age, whereas Dollar General is selling more essentials that are relevant for cash-strapped customers, young and old. Value prop seems more enduring for Dollar General, but I could be wrong. I'm always wary of businesses catering to teens. So these Dollar General stores do typically perform well in times of economic uncertainty, like what we're in now. But this Twitter user brings up a very interesting point as far as how Five Below is differentiated from the likes of Dollar General and Dollar Tree. It does cater to that younger demographic. Their product includes some jokey and more fun items, as well as the traditional dollar store staples that you might see in those other stores as well. But the catering to a younger demographic does sort of narrow their target audience. What else also does that is they're limited a number of stores. Five Below has under 1,000 stores total, I believe just above 950 or so, whereas both Dollar General and Dollar Tree have about 13,000 or more in the United States. So that too puts the Five Below at a disadvantage. But they do report their earnings after the markets closed today. And I did mention how on Twitter people were talking about looking at items that they could buy online at Five Below. And e-commerce is definitely a big focal point for people looking at these retail names. However, Five Below has not started to post that the financial numbers for e-commerce sales in its report yet. So hopefully we'll see some more information on that going forward. But as for right now, we're just going to be focusing on, I think, a lift in that revenue growth. Hopefully reopening its stores was a boon for that. Guys?
Kevin, when I think
Evelyn,
about that tweet, I think that I think that we're forgetting that there's still going to be teens even when these current teens grow up.
That's a great point. And those current tweens might be looking at TikTok right now, which, might help with Walmart. So Walmart could also be a potential adversary to Five Below as far as that younger demographic. Who knows?
Kevin, thoughts on Five Below here ahead of the earnings release?
Yeah, I mean, this is a company that focuses towards teen and preteen customers, and they have, that's where their products are focused. So, but this stock, like Evelyn said, had a rough March, but there's a pretty big swath of stocks that had a rough March, and it has come virtually, within $20 of its all-time high. So I think the fact that stores are opening, the retail environment is getting better. I think this is one that is worth looking at. But, the one thing about Five Below, it's got a very small float, 55 million shares only outstanding of Five Below. So not a big amount of stock out there. So this stock probably has the potential to move on any earnings event like this, guys.
And we've certainly seen that for other names, Kevin, as we've talked about so much on this program. Evelyn, we've got to leave it there. Great stuff, as always. Evelyn Baker, TD Ameritrade Network contributor. As we say goodbye to Evelyn, we want to welcome in Andy Swan, the co-founder of LikeFolio.com, to join the conversation here. Andy, this is really one that had kind of been on the decline after peaking out in April of 2019. Then you throw a pandemic and store closures onto the table as well. Is this a company that's struggling, or are things looking all right?
Yeah, they're definitely struggling, I think. But, the one thing I wanted to bring up when we looked at the LikeFolio data, of course, they had a rough past quarter and even the quarter prior to that. But what I wanted to highlight in our purchase intent mentions, which is people talking about actually doing business with Five Below, whether that's online or in the store. The current quarter, which is we're only about a month into, is pacing actually positive for the first time in 2020 on a year-over-year basis. And I've got that highlighted in red. So this current quarter is actually pacing a little bit positive, plus 7%, not huge, over last year's Q3, which separates Five Below from its peers. Dollar General and Dollar Tree both down year over year on the current quarter pace. But more importantly for me, it's a sign that maybe the worst is behind this company. It gives me some confidence that the executive team might have some confidence when they speak on the earnings call, which is really what all of this is all about. A lot of times these earnings reports, especially on retailers that have been closed for half the quarter, that didn't deem themselves essential and are just reopening stores, the numbers that they post for the prior quarter are almost thrown into the trash can as soon as they hit the wire, and it's all about that outlook from the executives. And between the data that's on the screen now, showing just a little bit of glimmer of hope, and what we're seeing out of the back-to-school digital sales for Five Below, while not big numbers, it's impressive on a year-over-year basis. I think that there's some ammo for the company to come out with some optimism on the call, which a lot of times is all it takes.
Yeah, and Andy, optimism may be, you're right, all that it takes to put Five Below on the upside. Andy, you're kind of a data geek like we are on this show. And Tuesday morning, we got a Red Book reading, which is that week over week, year over year data on department stores, chain stores, and discounters. And this week's number was up 4.6%. Now that's last week up over a year ago in the same week. So I think that number showed that some of these retailers are starting to get traffic and sales back. And back to school, as you know, is a massive undertaking and a big budget effect. I know I just did some back to school shopping. So, with the overall trends in retail adding up, I mean, is that giving you a little justification for the numbers that the LikeFolio's, giving out here?
Yeah, absolutely. And I think that those Red Book numbers are key because, Five Below, it did not deem itself essential, unlike Dollar General through the pandemic, mostly because it's not essential. It's very unessential in most of its product line. But that's what makes it fun and cool to go to. That's what makes it one of the stores people will probably be quick to return to, because it is about that physical in-store experience, that discovery shopping that it's very, very difficult to replicate online. And so I think that there is a pent-up demand for people to come back into these stores. They've got a little bit of money maybe to spend, but not much, and that's exactly what Five Below caters to. So I think they're in pretty good shape for when people return. It's one of those a lot of the tweets we see, it's one of those first places that people want to go back to because they just can't replicate that experience online. Unlike, what we're seeing with Macy's and some of the others, those experiences are very easy to replicate online, but Five Below definitely different, has its unique niche, has its demographic, and they're ready to get out and spend a little bit of money.
Andy, all things considered here, as we tie this together, is that guidance element, as you point out, that current pace of the quarter enough for you guys at LikeFolio to like this name into this earnings release, or has it run too far from the lows, given all the struggles that it did face, to justify the valuation?
Yeah, I'm not going to go out on a limb and say that I think this is going to be a really strong earnings reaction. What I wanted to communicate here is I think that the company has, for the first time this year, some real tangible reasons to be optimistic looking forward. I do think that the numbers that they put up are going to be pretty tough, and the stock has already run to a pretty good level. So I think that there's, you know, my point here is there's probably no reason to think that Five Below has an absolutely horrible earnings report or reaction to the earnings. I think they're pretty much in line with where they should be, and there's some reason for hope going into 2021. They're opening 120 new stores. That's still the plan. I hope. I want to hear from the executive team to hear if that's still the plan. But that's a 10% increase in their footprint, and that's always a good sign when companies are expanding what they're trying to do.